Well, hi traders. I see that the live webinar has started. Thanks for joining with this live webinar with FXDD. My name is Chris from Elite Currency. And in this webinar, we're going to take a look at long-term forecast for at least the second part of this year. We're reaching the end of the first half. So time for a new kind of fundamental perspective, but also technical on long-term charts. We're going to combine the both to get a little bit of a sentiment about what could happen. I think this particular spot is not the easiest. I have gladly done forecasts for an entire year in the past. Sometimes they worked out nicely, sometimes not as great. It's always difficult to look, 12 months ahead. With this particular environment, I must say that it's maybe even tougher. I'll be honest with you, it is really a mixed bag of all kinds of things are going on. So many factors could weigh in the next months, depending on political, economic factors, trade developments, trade wars, geopolitics, the markets themselves, the debt in the US and also in parts of Europe. Just a lot of things going on, and it's a bit difficult to, when things are tipping on a scale like this, the timing especially becomes very difficult. I think timing is always difficult, but maybe even more so now. So, but in any case, we're gonna try, and we're gonna you're gonna hear my thoughts, at least as far as I can. And if you have anything to add, of course, feel free. I gladly listen to your opinion too. And if you want to add something or ask questions, feel free to use that chat box, of course. Now, before we dive into the webinar today, let me focus here. This risk disclaimer is needed to explain the fact that trading for exchange and global financial markets in general is considered higher risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. All right, so let's close that. And let's pull over the charts. That makes the most sense in this context. No. Wrong button. There we go. That should be the right one. Yes, so we're going to look at long-term perspective, of course. Somehow open up a different profile, but doesn't matter. We'll just stick with this one and take a look at the longer time frames. Now, from a fundamental point of view, euro and dollar. I think if I would ask the people in here, which one is fundamentally stronger, most would probably choose the dollar. Well, why don't we make a poll? I think that could be quite interesting. Let's ask a question. I think there are potential polls here. I've never done this before, so but I think it's an interesting one. Do you expect the USD strength from a fundamental point of view? All right, sorry about that. Didn't want to make it that long. Yes. No. Just spontaneous idea suddenly. All right. Let's see. And we'll update that as we get some answers. So fundamentally, the USD probably has some good odds. First of all, of course, there was the expectation that interest rates would hike and increase this year. They haven't yet, as far as if my memory is correct, they haven't. But there was that expectation, right? Last year they did. So there's a case to be made that there's still that potential. Now, the recent figures have not been that strong, and that's maybe one of the reasons why we're not seeing that dollar continue with the strength we expected. The interest rates are have not increased, and the dollar is struggling kind of to break through bigger resistance, and the euro dollar to go through bigger support. That said, if the dollar, if the economy goes into some recession, if there's a trade war, the dollar is also in a way a risk off. So it's a safety, a flight to safety kind of currency. So the argument is that that would also create dollar strength in that case. If there's a trade war, geopolitical uncertainty, that would actually also boost the dollar at the same time. Plus, of course, you have the Eurozone that is not doing that great. And there were also rumors, as far as I read recently, of the Eurozone doing something to weaken the euro as well. I think cutting rates, I think, was mentioned. So that's, of course, a different factor as well on its own. So from that perspective, the USD might do well. Alternatively, as I already mentioned, we have the US economy is slowing down. The numbers are not that good. Specifically, last Friday had double whammy of numbers that were not that good. And some already mentioning interest rate cuts. Now, of course, that would not necessarily be good for the dollar. And that would actually should weaken the dollar, obviously. Specifically, interest rate hikes are never a good factor. Now, I don't think that will happen in the next months. I think the economy is too strong for that. Could it happen maybe December 2019? Maybe. We've seen interest rate decisions made already a couple of times in December at the very last moment of the year. So from that perspective, in a way, I wouldn't be surprised. So from these two perspectives, I'm not sure if one is necessarily stronger than another, and I'm not sure if there's going to be a winner that will push the euro dollar much into any direction. And it could be that the euro dollar basically goes sideways between 115 and maybe as a low point 110, for instance, or 107.50 maybe as the max. So could it go sideways? At this moment, I think that the highest likelihood is that it is somewhere between 107.50 and 115 at the end of the year, and basically goes sideways. So nothing exciting, nothing major, nothing nothing much to discuss really. That's, I think, is the most likely scenario. Nothing exciting, but that is my viewpoint at this point. From this perspective, from a technical perspective, I think there is some merit to say for upside first, to be honest. And that has a few things. Maybe you already saw my webinars and videos before, so you know some of this. 61.8 fib. The break below the 20-week EMA has been very choppy and corrective. The falling wedge that we see here is also a bullish reversal chart pattern. And price has recently, last week, had a pretty good candle close near the high with a pretty decent size candle that broke through the resistance of that falling wedge. Falling wedges, any wedges, falling and rising wedges, are difficult to trade and difficult from a timing perspective. All right, they're a little bit nasty sometimes. But I think it's a solid break. We have some good momentum to the upside. The 21 EMA did not break on the weekly chart, but could soon. And in that case, I do think there's space up to at least 115. All right. Now, what it does at 115, we'll have to see. It is a valid resistance spot where we have confluence between the 23.6 fib, for instance, the long-term moving average, previous tops as well, and could easily be a bouncing spot. Depending on how much it bounces, the minus 272 target could be at 108.50. It depends a little bit on how we fib this. I would flip it to here because to me, this looks like a clear five-wave pattern. 1, 2, 3, 4, 5. All of this could be easily A, B, C correction. That could be a bouncing spot for that move down to the minus 272 target at 108.50. Another resistance spot could be the 38, 117.30, which is close to that 117.75 level. So it's possible the price could peak up to there. Could it go further than that? I doubt it. As I said, this is a very iffy environment, and I from this point of view, forecasts I think are difficult. So you never know in this environment, but sideways range I think is the most likely. So, as I already mentioned, so 115 I think for the moment is the target. Then we'll have to see how price responds to that level. How much of a bounce does it create? Is it a strong move down? Right, then we would expect to move down to the minus 272 target. Are there strong bearish candlestick patterns at the 23.6 fib, basically? All right. daily chart is nothing much to add. Prices breaking above the 143 EMA. This is the second candle yesterday that broke above it. That could be some factor in some extra advantage for price to move up. What we really need to see is price break above this 113.40, 113.50 zone before we can get that move up, I think, to 115, 115.25 with a small target around 114, 114.40-ish. Nothing else to add here. Let's see. Ali is saying, may your dollar head towards 107.50 after retracement. And there's a gap at 107.50 here, probably. I'm not sure if that's the moment where Macron became president. I think that's the one Ali's talking about. And yeah, I think that could be a target level for this year after retracement. It's possible indeed. I wouldn't expect much more, though, to the downside than that this year, personally. And depending on how this year goes, 2020 might be a little bit more volatile year. That was my forecast already at the end of 2018. That 2020, I don't think anything substantial will push in 2019. But let's see, we're only halfway yet. From a technical point of view, I think pound dollar is more clear in the sense that it is more clear of a downtrend at this point. That said, there are also fair arguments to make for some corrective sideways motion as well, by the way, right? For instance, on the daily chart, we had a move up, move down like this. It could easily expand into some kind of correction or triangle. So it moves up and then down again like this. And that this is a wave A, B, C, D, and then up again for E. And it could stay in a corrective, choppy move for longer than we would expect necessarily, right? Depending on all how this Brexit plays out and stuff. So, of course, the pound dollar doesn't only have the dollar to reckon with. It has also the Brexit and a lot of the politics in the UK to deal with. And that on its own, I think, deserves its entire webinar as well. But for the moment, UK is staying in probably till October. We got a new leadership coming up. I think Boris Johnson was ahead at this moment. But anyhow, that's just still relatively short-term news, I guess, for the moment. And we'll have to see what kind of leadership and what kind of goals that he pursues, and if he's able to find a majority finally in the parliament. But so that's a big question mark, big unknown factor. From a technical point of view, I think that it could easily go into a triangle like this if indecision stays, for instance. Eventually, though, a bearish break, in my view, is expected. And a break below 120 is, in my view, the target. All right. And that has all to do with this downtrend. Yes, substantial sideways correction since end of 2016, up, down, a little bit of up, down, low, actually quite low volatility, 124 as a low, 132 as a high for the last year. But ultimately, this is, to me, a bearish structure with price below the 21 EMA. And if it goes sideways, it's a question of time before, in my view, it breaks to the downside. Now, if it were to break above the 21 EMA, that would be my invalidation spot, right? Because in that case, that would be the second break above the 21 EMA. This is the first. So if it does break above that, then that would invalidate my bearish outlook on the pound dollar. Okay, for the moment, it is testing the 21 EMA zone, which I think is a bouncing spot potentially for downside and for price to move to retest the previous bottom. Personally, however, I will only trade this push down if we get a clear break below the 21 EMA and this trend line here like that. That's the only time I'm trading it. If price were to move up higher like this and show momentum and break above 128.50, that would invalidate the downside as well from my point of view. And we would probably get the upside right away rather than after a lower low. All right, 128.25, 128.50. All right, so long-term bearish, but in my view at least, if it stays below the 21 EMA on the weekly chart. But at this moment on the daily, we are in a correction and we are retesting the bottom. And if it breaks above 128.25, 128.50, then it's probably expanding this correction. If it stays below that and then breaks through the support trend line, a lower low is likely, at least to retest 125. And then we have to see, how does it respond to 125? Personally, I wouldn't be surprised if the pound dollar does go sideways eventually until maybe a bigger Brexit deal is reached or some kind of outcome is visible on the Brexit in some way. Until then, price might easily go up and down between 125 and 132.50. So more or less the same like the euro dollar for this second half. Nothing exciting, again, boring stuff really at this moment, but that's nothing we can do about it, I guess, from a trading perspective. Just have to aim for smaller swings, smaller moves. All right, I have the poll. Unfortunately, only 2 voted, but maybe we'll get more later on. It's 1-1 at the moment, so if you vote, then you can be a tiebreaker, breaking the tie at the moment. Let's see. There are more people here. There are 21 people, so I hope to get more answers. Once again, the poll and the question is: do you expect USD strength from a fundamental point of view? Let's see some comments. Let's see. Ali, so 2 hours. We're waiting for your SWAT. I don't trade on those time frames though, and that would be a reversal trade as well, by the way. So it's 2 factors that are not that appealing to me, but let's see, maybe. Yeah, second half. Got it. Yes, understand. Not the 2-hour time frame. Could you see a small retracement of euro dollar back to retest wedge trend line, then up? Yeah, from my perspective, if it stays at 127, 112.75, 112.50, it's likely to be a bouncing spot. We got a weekly pivot point apparently at 112.80, long-term moving average. So maybe 112.50 is now less important. It is probably 112.75, 112.90. That is 112.85 that I think is key probably for as a bullish territory. As long as price stays above that and bounces at that level, I think it is in bullish territory. On the dollar yen, yes, correct. Indeed, trade idea is triggered. If you get opposite intentions, like opposite directions from 2 different systems, one from SWAT, one from CAMACD in this case, from Nenet, then it really depends on you, to be honest. I mean, that's one of the disadvantages, I guess, from Nenet and myself, is that sometimes there are some different views, different ways, different trading. A lot of things are aligned, but not everything. We try to pay attention to make alignment, but in some cases it's impossible, right? An error appears, right? So that's a little bit tricky, and we are actually internally also, we're discussing that a little bit today as well. Like, do we need to solve that? How do we solve that? Is it solvable, or do we let traders decide? At the moment, it's up to traders. So that's a little bit the tricky part. You have to make a discretionary choice. What you think makes more sense at this moment, basically, right? What we do try to pay attention is that the setups are not contrary, at least, right? The trading setups. So if I'm trading something that isn't in the opposite direction of what Nenet sends, right? That's what we don't do. That's what we for sure avoid. So it's not confusing. But what the software shows, we can't erase that. So that's unfortunately, there's nothing we can do about that. The only solution we were thinking about it even is making two channels, so that it's just not as confusing. I don't know. We were just discussing that today, actually. So if you have a preference, let us know, or if you have an opinion on that. Yeah, that's a good point, Ali. Indeed, it could be that both trades are successful because of the different time frames as well. And that happens sometimes, because sometimes and then it catches 20, 30, 40, 50 pips, and the stop loss with the 4-hour chart could be 100, right? So it could survive that pullback, and both could be a winner as well. Yeah, that's true, Theo. I think so too. I agree. It's just that not everyone is on that same level, so sometimes it could be a little bit confusing for people who start out, and we do need to take into consideration all kind of levels of experience, of course. So it is a tricky aspect, and I agree in theory that it shouldn't be a problem, normally speaking. But for those who start out, it is in practice, unfortunately, sometimes confusing indeed, and we got to take that into account. So far, 4 no's. I'm a little bit surprised. I thought there would be more dollar bulls out there, but 80% no at the moment. Surprises me a little bit. So not many people expecting dollar strength from a fundamental point of view, maybe because those interest rates are indeed not going up and are stalling, and maybe because they'll be going down later this year. But that's, of course, still a question mark. Other than that, dollar yen, let's take a look at the next pair. All right. Dollar yen, I think, could be at the end of the triangle. Now, triangles do take a long. This is A, B, C, D, E, potentially. And that's what I was looking at least. And this could be a wave 1, 2. Wait, no, the other way around. Excuse me. This is a wave 1, 2. So we are in a bearish mode at the moment on the dollar yen. But ultimately, I think this could be a pullback for more upside, depending on how we fib it. Not sure. Let's take a look at the daily chart. Maybe like this. This could be a wave A correction, perhaps wave B down for wave C, or we do it like this, and this is a wave A, B, C. So looking for this last push, in my view, lower, at least. It's potentially possible. I mean, sorry, well, everything's potentially possible. Let me rephrase that. I mean, the momentum is now down at this point. So although this could be a wave 2, and a reversal could happen soon on the dollar yen, at this moment, I don't see any clear signal that this wave 2 is finished. And I think the bears are in control, and I think that there's likely to be a new low within that wave 2. As long as price stays above this bottom at 104.78, a wave 2 is possible and likely, specifically if it bounces at the 88 and 78.6 fib or the 61.8. All of those are typical wave 2. Now, once this wave 2 finishes, then I'm going to expect a stronger upside on the dollar yen. And in that case, we're looking at the potential of a triangle finishing and a pretty strong move up. The confirmation would be a break above 112.30, and we would expect a break above this top. If this is indeed a wave A with 5 waves up, and a wave B correction, triangle correction, and up for wave C, then this top should break. So pretty big upside. Now, I'm not sure if that's necessarily going to be caused by dollar strength, maybe a little bit of dollar strength, but maybe more from yen weakness. Moving averages are aligned. So a break above that 112, let's say 50, should mean upside. So for the moment, this downside is a retracement, in my view, a pullback. Yes, agree, Theo, and a continuation then is likely. But whether this pullback is finished, I don't see any signals as yet, because to me, this is looking like a bear flag, and I'm trading this bear flag at the moment, actually, as maybe some of you know. Now, One of the disadvantages of that trade I'm taking is the fact that there's a pivot point and with 7 at this level. So I have no idea if this bear flag break is going to work. I know that the strategy odds of this setup are around 60 to 40 with the 1.5 reward to risk ratio. Obviously, nothing is 100%. And in 4 out of 10 cases, this could be a loss, 2 out of 10 a normal loss, a full loss, let's say, and 2 out of 10 a small loss. 6 out of 10 a win. Those are the strategy odds of this setup at this moment that I'm trading, at least. But from a discretionary point of view, bear flag, we got the break, but we didn't get a break below the weekly pivot point. We didn't get a break above the dynamic, or below, sorry, the dynamic support that I'm using, plus my Wiz 7 level. For those that don't know Wiz, it's based on Fibonacci sequence levels, by the way, very quickly. And if it fills, it's probably just like a wave B type. Up it goes for wave C, probably. I still think that one more lower low is in the cards. For me to turn bullish, it would have to break above 109.25 at the very minimum, the long-term moving average, and these bottoms. All right. The candle here was strong enough with the close near the low, dominant enough, according to my strategy rules, to qualify. But that's not a guarantee, as I said. Yeah, sure. So that's it for the dollar yen. One more lower low within that retracement and upside eventually is my expectation. Now, what can happen this year, by the way, very quickly, probably I would say the down and up and then some retracement. So I wouldn't be surprised. I don't think we're going to get a massive break probably right away, but I might be wrong, of course. But I wouldn't be surprised if the price closes maybe a little bit higher than now, and we get a bigger break next year. Maybe the dollar yen can sometimes move a lot during the Christmas and holiday season, by the way, as well. Well, let's look at that. TZ is asking, he sees a wedge. I think you mentioned, or which kind of wedge was it? Falling wedge. Monthly. So let's connect the lines like this. And like this. Oh, sorry about that. There we go. And maybe indeed there's a little bit of an angle, a steeper angle of resistance and a shallower angle of support. So, but I think that it is too young as a falling wedge. I think we would need to have at least one more hit at the bottom of that falling wedge to make it a little bit more sturdy pattern. At the moment, we're looking at, if this is what you're looking at least, let me check. This is the pound dollar. So if this is what you're looking at, I don't disagree. It's just that I think that the pattern is not complete. I would need at least one more lower low and a bounce at that level to say that this is becoming more likely to play out as a pattern like that. You are right, though, that there is divergence between these bottoms. So if price does break above the 21 EMA, by the way, it would be a very fair argument to make. And the consequence of that would be that there's a reversal potential from the 21 EMA up to the 144 EMA. All right, with the divergence like that, that would be the target. And it could be maybe an ABC up like this, up to that long-term moving average. So I don't think that the falling wedge is a factor as yet, basically. I do think that there's a potential for this wedge, in my view, if it makes one more bounce, if it respects that level one more time, and then breaks above this rising wedge. But the divergence is there, and it's a good observation. And if it does break above the 20 EMA, then we could get that bigger ABC. Target could be the minus 272 target. So from my perspective, it depends a little bit on if price can break above 133, basically. No. Yeah, 133-ish, 133.40, 134-ish. Yeah, and the 272 target is at 150-ish, 151. Otherwise, besides the dollar, euro, pound, and yen, let's take a quick look at, first of all, gold. Then we'll take a look at Bitcoin, and we'll take a look at some stock indices and oil. All right, gold. I was looking for a triangle for very long. This being a wave A, B, C, D, down for E. And I expected a deeper E than this, but price has broken above this top. So there are two things, or three things maybe. One is this is still part of a wave D. So price would need to break above this top to confirm that this is not a wave D anymore. Because if this is an A, this is a B, once price breaks above the wave B, then it cannot be a wave D anymore. So theoretically, this could all still be part of a wave D, and down it goes for a wave E. The alternative is that wave E is already finished here. It's a very small wave E, and the uptrend is ready. Triangle is finished, and we can see a new uptrend start with gold. Now, considering the timing, end of last year I said gold uptrend might start in the second half of this year. I didn't expect the first half. From a timing perspective, we might be getting closer and closer to the moment that gold is indeed an uptrend finally. Although I was hoping and personally preferred and analyzed that wave E would go deeper, the odds of that are going down because of this bullish price action at this moment, unfortunately, in my view at least. But with current price action, it could be that this is a wave D finished. And we are rolling in slowly into the second half of 2019. From a discretionary point of view, when I analyzed gold a while ago, a few years ago, gold tends to likes to make movements at the end and at the beginning of time periods. I'm not sure if that's necessarily still valid, but it likes to move like on the first day or on the last day of the week or like the last part of the year or last part of the decade. Or I'm not sure if that's still part of its characteristic, but it's something that I noticed. I don't know how important that pattern is really, to be honest. It's just something I noticed. It could be that it plays a role at the end of 2019, but maybe it's just coincidence. It's not that of an important pattern. And let's see, those are two scenarios. Alternatively, yeah, the third one could be that this is ABC finished basically, and this is already a new uptrend. So with 1, 2, 3, 4, 5. Right? That this is the uptrend here. If the wave E is finished here, then this is part of the new uptrend. So where does the trend start? Either from here, from the first red line, or from the second red line. Those are two different scenarios. And the third scenario is that it's not an uptrend yet. This is still part of the wave D as long as price stays at least below the 1363 level. Which one is my favorite at this moment? I don't have a very high confidence interval with any of those three, but if I had to choose, then I would lean towards the fact that wave E is finished here at this bottom at the moment. Oh, there is a gold G20 meeting. For gold, excuse me, I misread. G20 meeting in Japan, Ali is saying, at the end of June. So maybe that from a fundamental point of view would be the most important then. Thanks for that heads up. And Ali's asking or adding, sorry, that gold is generally bottom near to rate hike in the US near to December. Rate hike. I'm not sure if we're going to get that. That's a good question indeed. Yeah. Trade war, if there, of course, creates uncertainty. If there is uncertainty, that's good for gold. If there's less uncertainty, that's bad for gold and should, normally speaking, head lower based on that if there's less insecurity. Totally agree on that. Ali is adding. And US CPI came worse out than expected. And indeed, you are seeing your dollar respond positively to that. And the bearish retracement has been quite mild so far, at least, reaching 131.10 only. Sorry, 113.10. And is now challenging 113.40. And a breakout should see price move up to 114, 114.40-ish, maybe 115. All right, what else? We have Bitcoin. Why not? We can take a look. Not everyone is interested in Bitcoin, but we can take a quick look. And what we see, of course, is various strong upsides with strong pullbacks. You don't see it too much here because, well, this upside totally made these moves, these smaller moves, invisible. But that said, that's typical for Bitcoin so far is strong upsides and very strong retracements. And this recent retracement has been strong too. Now we're starting to seeing the start of the new upside. But usually these retracements and pullbacks are very lengthy with Bitcoin. Based on that alone, because I don't look at the Bitcoin, I don't follow Bitcoin news, so you don't expect me to discuss this. I'm only going to look at price action at the moment. We did get a break above 21 EMA. Moving averages are aligned. But that said, based on that momentum candle, by the way, of last month, I wouldn't be surprised to see follow through higher. Let's put a fib from here to here, like the 50 fib. But ultimately, I think that this could easily go sideways. I don't necessarily expect a break this year. I think it can go up, then down, and then up, and then maybe finally make a breakout. So that's my view, at least. Upside, but I do expect a bounce and resistance at the 50, 61.8 fibs for the moment. Oil. Let's see, 61.8. Is that for oil, Teo, or is that for Bitcoin? Oil has a resistance trend line here and has a support trend line here. Made it ABC up, and after that, a very strong downside, followed by a decently strong upside, and now downside again. So it's a little bit of a triangle. 61.8. Yeah, it seems like a good level indeed. 13,000. Golden ratio makes sense. Maybe the most likely one indeed. Oil, I don't have any particular favorite at this moment. No, I don't see much on oil. I think if anything, it might retest the 45-ish at this moment, which could be a bouncing spot back up to the top of this triangle for the moment. What else do we want to discuss? Oh yeah, no, not single stocks. 1 second. We're looking for CFD. And let's take a look at S&P 500. All right. S&P, let's take a look at the weekly chart. So this is a typical correction, typical wave 4 correction. Then we had a push up, created divergence between these tops. And that divergence did send the price down to the 144 EMA, which is the target typically when you do have a divergence on a higher time frame. So all of that was classical, right? We had triangle, strong uptrend, wave 4 triangle, break with corrective price action, choppy price action, typical for wave 5. Wave 5 did break above the wave 3 top, but it didn't go too far, and clearly divergence pattern and clearly loss of momentum. Then we had a classical correction, ABC, and then we got a bounce at the 144 EMA. All of that was according to the book, right? This part, I'm not too sure. We got a push up, but it was pretty strong that broke the previous top. And now we got a move down again and a move up. And yeah, it could be, as I mentioned already in the past, a kind of expanding wedge pattern, perhaps. With wave A, B, down for C, D, E, for instance. Or this is just a wave 5, and this is A, B, C, D. Wait, hang on. A, B, C, D, E. That would still be upside. 1 second. This being A, B, C, D, E, and then down. It depends. Some kind of triangle in any case, or wedge pattern. And we can see higher highs and lower lows at this moment. So there's a little bit of conflicting messages. We had a pretty straightforward uptrend with minor pullbacks along the way the last 10 years. Volatility is increasing here. And considering the bearish engulfing twins from last month, I'm leaning towards the fact that this is a pullback for a move down, actually, on this S&P 500, and move down to the bottom of this falling wedge, or maybe at the very least to this head and shoulders level, right? This being left shoulder, head, right shoulder with the 144 EMA. So this pullback, at least down to this level, if not even further, seems likely for the moment. All in all, it could be a wave 4. It could be that if it moves like this, that would be head and shoulders, left shoulder, head, right shoulder. And that could be used, this inverted head and shoulders, right? Like this, could be used for one more push higher. And all of that is just a very expanded wave 4. And waves 4 are typically choppy, corrective, lengthy, yucky, all of that. And if it does go sideways long enough, it could be such a wave 4. We get one more push up and one more push up for wave 505, and then maybe finally some larger correction, some larger downtrend. But only then, maybe. Alternatively, if it does go lower, if it breaks through that head and shoulders level and moves to the bottom of this wedge, then the wedge pattern is probably likely to continue a bit longer. And it could break both ways, this wedge. Yep, indeed. Although it's November 2020, it's not this year, right? Next year, indeed. It is very true. I wouldn't be surprised that Trump is aiming for that. A robust stock market. I totally agree with that. And I think his slight pressure on the Fed to not increase rates is part of that plan. Although, of course, the Fed will never acknowledge that Trump's pressure is a factor. They will not officially acknowledge that. But I wouldn't be surprised if that's unofficially at least part of the thought process. But that's my speculation, of course. But yeah, figures are slowing down. So it's probably also, from a Fed point of view, there are fair arguments to be made why they shouldn't increase rates at the moment. What else? If we draw a trend line in the monthly chart, 2,500. Yeah, indeed. Something like this probably. We would need a clear break below the 21 EMA. We had a double dip below the 21 EMA before, here and here and here and here. Both of them went nowhere. So we'll have to see. For us really to get a bigger break below the 21 EMA, price would have to also break below 25.50 at least. And then there's a chance that price might go and make a bigger retracement down to the 144 EMA and back into the support supply demand zone here, like this. But only a break of this, and this trend line indeed, like that. Otherwise, it is possible that it gets one more higher high. Specifically, of course, if the interest rates are not going up, that's good for the stock market. Trade wars are not, so it depends a little bit on that too. If the trade wars are not as bad as, don't play out as bad, then that would be good for the stock market. Interest rate hikes not continuing, flat interest rate is good for the stock market. So there are reasons for potential wave 5. Even if the economy slows down, eventually quantitative easing might be good, but now we're talking, way down the line. That's not really at the moment. Actually, quantitative unwinding, I'm not sure how that will affect the stock market, but if it would, but it certainly had a part of pushing this up, if I understood correctly, and it was part of a reason of this larger expansion. So that might have a negative effect, actually. Okay. Wave 2 depends a little bit on which, you mean wave 4? If we put a fib from here to here, then definitely still very much in retracement territory, 23, 38. 50 fib, all of that is retracement territory. As long as it stays below 144 EMA, all of this, any downside, any sideways move on the S&P 500 could easily be a wave 4 indeed. And it could easily be just a corrective pattern for one more higher high. Like we had here indeed. And like we had here on the lower time frame. Very true. Wave 2 on a lower time frame. All right. Yeah, I think lower time frame could be. This could be wave 1. This could be part of wave 2. Wave 2s typically go deeper. It's not a must. It is a guideline, not a must, not a rule. But if this is a wave 2 at this moment, it went quite shallow. It would normally go a little bit deeper. So let's put a fib from here to here. And it went to the 38. So typically it would go to the 61 or 78.6 fib at around 24.50, 25.60. If it goes to 25.60 to the 61.8 fib, that's equal to that head and shoulders we just talked about. This being left shoulder, head, and right shoulder, inverted one. So, and the long-term moving average on the weekly chart, plus the 61.8 fib, 25.60 could be a very strong support zone from that perspective. If we get a deeper retracement at this spot. That said, if we get a break above this top, of course, then there could be an immediate breakout. If I had to choose at this moment, I would say I would not expect a breakout soon. My bias at this moment, I think this is more of a bouncing spot, but I don't have a high confidence interval. If necessarily, it's just I like more the Forex market in any case, but for trading purposes. But if I had to choose, I think it's more of a bouncing spot for a move down and then a bounce up again. So at the end of the year, I wouldn't be surprised if prices maybe somewhere in between the 23.6 and the top. But after it moved down and then up and then sideways maybe. Just a guesstimate, really, to be honest. Let's see how the next 6 months play out. I guess that's about it. We had a good almost hour here talking about all kind of things, U.S. elections, will certainly have its impact, G20 and trade wars and geopolitics, economic data coming up. And of course, we talked a lot about price patterns as well. So, but once again, just to emphasize and just to make clear, these are all more difficult. It is a difficult time, I think, difficult year to estimate, to make any estimations, to make any forecasts. And of course, these are all very long term. So you got to take that into account to be careful with that. But that's it for today. And then we'll be back soon. Me too. Next week, actually, with new webinars, trading webinars, and educational webinars. And in the meantime, wish you good trading. And by the way, FXDD YouTube channel, you'll find more videos from Annette and myself. If you're interested, you can subscribe there so that you miss anything on that channel. And wish you good trading once again. Cheers.